When it comes to altcoins, Ethereum is undoubtedly the market leader. A strong ETH lifts the tide across all altcoins, and a weak ETH, well, it spells trouble for alts. So in today's video, I'm going to be covering the 3 reasons why ETH is currently selling off, how bad I think it could get, and what my plan is over the next few months. Hopefully by the end of the video, you have a better understanding of the market dynamics that are currently affecting prices, and are thus able to navigate this period more effectively. Let's dive in. And if you like this type of content, make sure you hit that subscribe button and click the notification bell so you don't miss a future upload. I cover all sorts of topics on this channel, like my favorite altcoins, airdrops, market strategies, and more. So firstly, let's have a look at Ethereum. It did try and push up towards the upper echelon of its previous range high, but we did see it get rejected, and since then, price has faltered and come down to the $1,500 region. The major support level that I'm keeping my eye on for Ethereum right now is this 2018 all-time high, which sits at 1424. And if Ethereum does break below this previous low and sets a lower low, then I think that it's reasonable to expect that price momentum is dragging ETH into this 2018 territory. But really, if we want to look at it on a more macro level, we are still in a range for Ethereum between 1400 and 1800, marking your range high. So anything in between, I guess, is seemingly inconsequential for Ethereum long term. However, in the short term, as I mentioned, it can have big ramifications on altcoins, as they are essentially considered to be higher beta plays versus Ethereum. So Ethereum's price movement in either direction is thus extrapolated by the altcoins in terms of percentage price gain or percentage price losses. I will get into the 3 reasons why ETH is selling off and what I think it means for the overall market. But one thing to note, and another reason why Ethereum has been declining, is just Bitcoin's dominance has been on a tear lately. You can see after Bitcoin dominance broke above that key resistance level at 48%, it's pretty much been going up and up, currently sitting at the 51% level. You do have a major resistance level coming in at 54%, but for Bitcoin dominance, that would mark another 5.6% move to the upside. Alts versus Bitcoin would get crushed in that scenario, and to be honest, that is what Bitcoin looks like it wants to do in terms of its trend. One bit of hopium for alts, however, is that Bitcoin dominance typically does peak around 200 days pre-halving. You can see this red line marks out the halving here, and that was for 2020. If we look at where we currently sit for the 2024 halving, we can see we are also at the 200-day mark. Does this mean it will be another peak again? Well, I don't really like using a sample size of 1 or 2 to come to any concrete conclusions, so I'm going to leave it there and see how Bitcoin responds in this zone. But the general market trend, with the driving market catalyst at the moment being the spot ETF and the Bitcoin halving next year, certainly do allude to the scenario that Bitcoin leads into the next cycle, and that's typically what we see from cycle to cycle. It's Bitcoin leading, and then you do see that flow and effect later into Ethereum and into altcoins, and judging by previous cycles, this cycle is no different. So back to Ethereum. ETH BTC is also declining. If you do want to draw out a horizontal structure on your charts, you can see that we have been making lower highs. You can see we first rejected off this 0.8 region, and ever since then we've been making lower high, lower high, lower high with failed breakouts across this diagonal. We are currently in the major support box at the 5.5 level, but Ethereum looks a little shaky right now, so there is every chance that we do break below, and then you are looking at even lower targets in the 3.5 region. However, there's also a chance we do bounce here. Last time we did deviate below, we managed to break back above and hold on the weekly time frame, so that could happen again. We just have to keep our eyes on Ethereum, and this isn't really a trade you would need to rush into, because theoretically, if ETH was going to reverse, let's say it does deviate below, you would need a reclamation of this level, and B, a break of this diagonal trend to assert an official reversal of trend, and that would mark a clear pivot point for Ethereum to start breaking out into an upwards trend. So these would be your 2 major things to take note of: a clear bounce / reclamation of the horizontal support line, and also a diagonal break to the upside. But Ethereum does have some headwinds in the short term, so let's talk about them, because we know how important ETH is for the altcoin market as a whole. So these 3 headwinds for Ethereum are definitely worth talking about. And I want to start with probably the biggest supply headwind for Ethereum right now, which is the FTX hack. Now, just about 1.5 months ago, FTX was hacked for over $600 million. And you can see here that the exploiter has managed to obtain around $150 million worth of Ethereum. That's a significant amount of ETH potentially hitting the market. And we talk about supply events all the time, because Ethereum isn't shy of supply events. It does have the official FTX liquidations. It has the official Celsius $2 billion worth of Bitcoin and ETH being distributed to creditors. But the thing is, in those events, you're not guaranteed the selling of Ethereum on the open market, because you don't necessarily know whether recipients of a distribution will want to sell. A lot of them may choose to hold, and that's the main driving argument behind why Mt. Gox, in terms of a Bitcoin supply headwind, might not be as big as some people would like you to think. However, when it comes to a hack, most of the time, you do see this Ethereum end up being sold. And although you can have wallets being frozen on certain exchanges, they're still able to swap through various DEXs, and there are mediums for them to be able to off-ramp that crypto. One method of which we've seen by this hacker is swapping via Thorchain for Bitcoin. So there has been a substantial amount of sell pressure for Ethereum because of this exploiter, who, as we can see, we're looking at his wallet right now, still has $150 million worth of ETH. And this is not me being alarmist. I actually think the market does often price these things in ahead of time. So I don't think this is a big supply dump or anything crazy coming for Ethereum, but it definitely is a little bit of a reason why Ethereum's struggling right now, and I'm listing the 3 reasons today so you have a bit more of an understanding, and then of course I'll get into what my plan actually is in terms of the overall market. And we can see at the moment the depth for Ethereum isn't that great. Like, your 2% depth on the major exchanges with the vast majority of liquidity, like Binance and Kraken, is only sitting around $10 million. Historically, that's quite a low amount, so any sort of sell pressure coming onto the market would have a greater effect. I think that's one of the reasons why the market is just sitting a little bit on the fence when it comes to ETH. I also think DOJ action for Bitcoin and Ethereum is a very big event that investors are hanging out for at the moment as well. But I think what's hurting Ethereum even more than potential supply overhang is narrative exhaustion. So if you go back to Ethereum throughout the course of this year, there's been a few major narratives which have propelled it. One is the merge towards the beginning of the year, and that was obviously Ethereum's switch from proof of work to proof of stake, which makes Ethereum effectively deflationary in the right environment, and we'll get to that in a second. Actually, technically the merge was last year, but that paved the way for the second event in the beginning of this year, which was the Shanghai upgrade, and that enabled redemptions of Ethereum off the beacon chains. That was really positive, a positive catalyst for liquid staking, because more people were then incentivized to go and liquid stake, and we've seen a massive boom across like Lido, Rocket Pool, Frax, the coins and the protocols in that industry, which has been amazing. But Ethereum itself is kind of exhausted now, because you do have EIP on the horizon, which is set to lower gas fees by an order of magnitude. However, the EIP upgrade has been delayed. We can see Marek, a dev on Ethereum, did say that he's guessing early 2024. We were hearing before from developers like Tim Baker that it was going to be towards November, December. Early 2024, I guess, is starting to lose investors' confidence on the timeline here. And that was structurally like one of the biggest catalysts for ETH, and also one of the biggest catalysts for L2s. And it's still a major catalyst. I think there's definitely a trade here. The problem is that it's been pushed back just enough for investors, I guess, to discount the value of it in live pricing of these assets. Because if you don't see EIP until February, March next year, that's just delaying the timeline. And there's a lot of other events in between that which investors are worried about. For example, the DOJ regulatory action. Right now, you're in a situation where the narrative for ETH is just a little bit exhausted. And you've got Bitcoin, which has a slightly stronger narrative right now as this safe haven asset due to geopolitical events around the world. And Bitcoin tends to thrive during these periods, or at least holds up better than altcoins during these periods, because it's seen as some sort of digital gold, safe haven asset. Although technically it does behave like a risk asset, there are elements of its narrative which definitely bode slightly better for Bitcoin during certain macro and geopolitical events. Whereas Ethereum doesn't really have that. It's more viewed as a pure risk-on bet on technology, which I guess performs really well when the market's risk-on and when liquidity conditions are positive. But when they're slightly more negative, it doesn't perform as well. The ultrasound money narrative, that was the strongest driving factor behind Ethereum around the time of the merge. And you can see, although Ethereum was deflationary for a long period of time, it has flicked back into inflationary territory with, over the last 30 days, a annualized supply increase of 0.30% being realized, with a 30,000 Ethereum supply change taking effect. And since the merge, you can see that ETH has largely been deflationary. It's been amazing, but you can see this starting to curve and tick upwards now. And that's basically just down to the fact that market activity is extremely low. The retail activity in this market is extremely low and not many people are trading. And when not many people are trading, you don't have as many gas fees being burnt. So you can see the chart in front of you, although we had a spike earlier in the year, which resulted in ETH being super deflationary and a lot of ETH being burnt and subsequently the ETH price increasing. Now we are seeing a compression in the amount of gas fees being burnt, which is basically resulting in A, the narrative behind like ultrasound money just becoming slightly weaker, and B, the net effect of the amount of Ethereum being burnt having less of an effect on the supply and demand for Ethereum in the live market, which basically means there's not as much supply burn to offset the reduction in demand like we had previously seen, and that obviously affects ETH as well. And then the third thing which has been affecting ETH is the Ethereum Foundation. There has been a fair bit of FUD around the ETH Foundation selling some ETH. They sold $2.76 million, which is 1.7k worth of ETH 2 days ago, which is a substantial amount, but at the same time, I don't necessarily think this is inherently bearish because the foundation still needs resources to run. I mean, how do people expect that Ethereum holds developer conferences and hackathons and all these sorts of things if they don't have runway? Of course they need runway in order to pay for developers and pay for events. So I don't think them selling $3 million worth of ETH is necessarily bearish, but last time this happened, it did mark a local top, and that seemingly looks to be what is playing out on the Ethereum chart at the moment. I do think this is a bit of a coincidence though, and as I said earlier, I don't like taking super small data sets and then making conclusions out of them. But one thing we can assert is that any sort of material net selling from the foundation is not going to be viewed super positively in the eyes of the public, and thus it does mark another kind of bearish headwind for Ethereum. So all of these factors combining are creating an environment where ETH isn't performing amazing, alts aren't performing great, and then Bitcoin is still holding up on a relative basis. So you're seeing dominance shoot through the roof. So the question is, when will this end? And as investors, what can we do about it? Is now the time to be buying altcoins? Is now the time to be going back into Bitcoin, or just simply keeping cash and not even paying attention to the market? I'm going to kind of give you my thesis now and run through what I think you can expect over the next few months and what my mindset is right now to approaching the market. So you have Bitcoin dominance rising, you have alts getting smashed, you have liquidity drying up, retail vanishing from the market, and good news having not much of a material effect on prices. You might think this is atypical market behavior for this stage of the cycle, but that couldn't be any further from the truth. This is very typical of pre-halving year market conditions where you do see this sideways price action from the market. You can see in front of you, I've got total 2, which is the total crypto market capitalization excluding Bitcoin. It's pretty much just chopping sideways right now in a range. And the thing is, this is arguably more damaging to retail than just prices straight up dumping because of time capitulation. Oftentimes, time capitulation affects people more than price capitulation because they start to get super apathetic, they start to lose confidence towards the market, and they simply get bored. And when it comes to markets, especially speculative markets, they thrive off entertaining people. I mean, crypto is a vehicle for speculation. It's pretty much one big glorified casino, whether you like it or not. And casinos rely on making their players entertained. If the players are bored and they don't like the games they're playing, they're not going to play. And right now, it isn't a very fun or attractive or sexy game to play because the price is just moving sideways, and thus you see time capitulation. So most market participants have checked out. Most retails left the market. But historically, this is the worst time to actually do so because we're entering a pivotal accumulation phase. This is the time to set up your portfolio. This isn't the time to be checking out. It's actually the time to be paying attention because the greatest gains come during these periods historically. So how do you approach this? Do you start buying altcoins? Do you buy Bitcoin? Well, the first thing is you have to come to terms with where we currently sit. So you have to accept that Bitcoin is likely to lead the market in the early stages of the bull run. As I mentioned, many of the current market catalysts are Bitcoin specific, the halving, the spot ETF. And although there are clear flow-on effects for other crypto sectors, it's not wise to fade Bitcoin during this period. So loading purely into alts during Q4 2023, I personally don't believe is the most prudent move. And of course, this video is not financial advice, it's just entertainment and based on my opinion, but I don't think any financial advisor would tell you to go 100% into alts and completely ignore Bitcoin, especially when dominance is trending upwards like this. So what do I like to do instead? Well, I like to approach a top-down approach to the market. This means starting with the pillars, my Bitcoin and Ethereum, and then working my way down the risk spectrum in terms of what I accumulate. Prioritizing quality first. Now's not the time to get into a bunch of junk and speculate on meme coins. Now's the time to focus on Bitcoin, Ethereum, and quality altcoins only. These are your high conviction plays in altcoin sectors that you truly believe in. I've done videos on this in the past that you can check out on my channel. These cover some of the altcoins that I personally like from some of the biggest narratives that I like, but keeping in mind that I'm still positioning myself heavier in Bitcoin and ETH than I am in altcoins still. And my Bitcoin position is bigger than my ETH position because Bitcoin is leading the market right now. And I think it would be irresponsible of me to try and fight the trend. In crypto, you generally want to go with the trend instead of fighting it. And then you want to tweak allocations based on changing market factors. And I don't think we've had the risk on factor of the market quite change yet. It's still relatively risk off. There's still macro headwinds. We haven't heard anything about a Fed pivot. So for now, Bitcoin is clearly going to outperform. And if you take away anything from this video, it's that when you're trying to make money, act slowly. You don't need to feel the need to rush. When you're trying to preserve money, preserve capital, act quickly, because there's a premium on liquidity. There's a premium on money now versus money later. And one of the worst mistakes that you can make as an investor or trader is eating into your capital base and taking huge losses, because that actually prevents you from making huge gains in the future. And it might sound counterintuitive, but oftentimes the best thing to do in the market is simply do nothing. And just like a lion, wait for the perfect opportunity to pounce on your prey instead of pouncing at the wrong moment and exhausting all your energy. That's going to limit your ability to go out and hunt even more prey. So cash is still king during this phase. And one of the reasons that cash is king is because we don't even necessarily know the top altcoins next cycle. We can try and predict it, but many of the top performers next cycle, they're going to be the new altcoins. They aren't necessarily going to be the old crop of altcoins from last cycle that were the narratives of last cycle. So what you really need to do is look for the narratives of next cycle. Now, we already know a few, but the vast majority haven't cemented themselves. Now, you guys already know there are a few sectors that I like. I think AI is super intriguing. I think crypto gaming hasn't really come to the forefront yet. And I think real world assets have a lot of potential. And I think RWAs might actually be my top pick for next cycle. And there are a few projects that I'm looking at within that sector. One of the projects that I like within this niche is Soil, one of my official show sponsors. I'm always on the lookout for projects in narratives that I think are going to be big in the future, and Soil's one that definitely came to my attention with their ability to pay out up to 14% on real-world assets. So basically how they work is DeFi, the crypto investors, lend stablecoins to the Soil protocol. The Soil protocol then takes those stablecoins to provide liquidity to the fiat world, which is comprised of premium institutional and corporate borrowers. They bring yields back into the protocol, and then interest is then paid out to crypto investors, which is denominated in token rewards as well as stablecoins, and that's how you get yields like this. With the DeFi yield market drying up right now, and with not many avenues to gain yield in this market, with pretty much the most competitive alternative being your traditional bond market with rates super high, I think DeFi in general is starved for yield. And that's why I think real-world assets do have a huge potential to have an impact on the market, not just in the future, but right now, because there are a lot of investors that would love the ability to earn capital on-chain in a more efficient manner versus going through a traditional broker. And applications like Soil are allowing you to do exactly that and earn passive income while you're at it. I won't take up too much of your time on Soil in this video because I have run through it in the past, and I know I'm going to be talking about it more in the future. But for those that do want an update, based on the last video, their IDO officially sold out. So they raised 900,000. They did their IDO through Engine Starter and Seedify, and they actually have gone into their next phase, which is their official Soil listing. So their official governance token is now launched across Mexi and across Gate.io. So you can see right now it is trading live on these markets, and it is also live on CoinGecko. So if that is something you are interested in, you can get involved now. This video is not financial advice. I'm not saying you should or shouldn't buy. That's based on your goals, and that's based on your own approach to the market, but I thought I would inform you guys that they are now officially live in terms of trading of the Soil token. But back to the point I was making before, right now it's really just about trying to identify those narratives for next cycle and also keeping capital aside for the narratives that you don't know are going to eventuate. Like, think about AI earlier in the year, for example. Like, we all knew AI was going to be the future, but we didn't know that the whole ChatGPT investment boom was going to happen as suddenly and as as quickly as it did. So let's say in a year's time, there could be another sector that crops up and gets a large amount of investment and kind of sparks this narrative inside crypto. You can't possibly preempt that. And the only way you can really be prepared as an investor is to keep stablecoins on the side. So although you have your pillars, which are the narratives like you are currently accumulating and positioning in, you should also have cash reserved for the future pillars that we can't quite identify yet. Because as an investor, I don't claim to be able to predict the future, and you shouldn't have to predict the future either. All we have to do is be slightly quicker than everyone else to the trends. And obviously, if you're in the industry every single day, like I am, and obviously you are because you're watching these videos, you're going to be ahead of the majority of retail who are going to be lagging by months. They'll be 6 months to a year behind by the time a bull run comes around, and a lot of them will just lag the narratives that we will know will already be establishing. But I don't claim to be able to know exactly every single narrative, which is going to pop off every cycle now. And it's also important to know when to be aggressive and when to be conservative. So in certain markets, you want to flick the switch, be really aggressive, make big outsized bets. And in some markets, you just want to preserve capital, take it a little bit slower, and just focus on building the strong foundations for next cycle. And I would say we're in one of those periods right now. We are entering, I think, a great accumulation phase for Bitcoin, ETH, and of course alts, if you follow the structure that I previously mentioned. But right now, I don't think the time to go super aggressive into the market, because you will be catching a falling knife on a lot of altcoins. And you can see here, total 2 is still just ranging sideways. A substantial breakout to either side would no doubt mark the next big trend for altcoins as well. So I think in summary, the next 6 months are going to separate the sheep from the goats in this market. The winners will prevail, and the losers, well, they won't know they're losers until the cycle's done, because they're the people that come in super late and only get interested in cryptocurrency once it's back in the news again. But obviously you guys, you know better than that. You are here in the middle of the bear market with me, building, learning, and investing in yourselves to set yourself up for next cycle before retail comes back. Now, it will be a long road. It's going to be hard sometimes. You're going to feel like capitulating because that time capitulation I spoke about before, but I promise it will all be worth it at the end. And if you do want to follow me on this journey as well, hit that subscribe button if you haven't already. I would love to spend some more time with you in future videos. Hope you enjoyed today's video. Smash the like if you did. If you want to check out our show partner, link in the description below, and I will see you in the next video. Peace out.